Deven Choksey joins us in the show right now. Deven, hi, morning. We were just looking at the kind of reaction that we had on HDFC Bank on one hand and then a Kotak on the other. How is it that you're maneuvering within the private banking space? Because this was pegged to be the go-to sector.
Yeah, good afternoon, Ash. Good morning, Ash. Sorry. Well, I believe that the fundamentals of the banking space, I think, hasn't changed much. On the contrary, I remain distinctly comfortable with the kind of strength the AUM book is suggesting for most of these banks, including HDFC, including Kotak, among others. Uh, Obviously, I think the business condition, I think, remains robust for those who are having the capability to deliver, and particularly the size of the balance sheet matters in this case. Good part of our HDFC and Kotak both, I think they have the balance sheet to support them for the business model that they are pursuing. So that is not a challenge. However, I think one may argue that if all these possibilities are there, then why the growth is muted? In my viewpoint, I think the growth remains slightly muted in this particular quarter because the current year's spending program, which the government has initiated post-election, is now gaining momentum, and we are expected to see in the second half of the financial year the momentum picking up from the industry side. Given that possibility, both for the consumer segment as well as for the industrial segment, the borrowers are likely to see the sharper demand coming up from the bank, from their side, from the banks. So that's where probably I think we could see the second half of the financial year remaining relatively more stronger compared to the first half of the financial year for the banking space as a whole. And these banks remain definitely, I think, a good buy opportunity at current levels, given the kind of subdued prices of the stocks in the market. I think it gives the promise to deliver somewhere around 20-25% kind of return in a normal year of 12 to 15 months from now.
Deven, morning. You've got the Hyundai IPO listing date with experts definitely talking about how it's going to be a very muted debut. What's your expectation? How are you looking at the overall sector and how is it that you expect Hyundai to perform?
So on one side, you already have the demand fully satisfied for the investors, particularly institutional investors. You can call them as portfolio investors. On the other side, the retails have refrained from buying into the IPO largely because of the fact that I think there is no much opportunity left for the flipping of this IPO. The valuation wise, the company is adequately priced as of now. And unless we see very strong undercurrent in the business environment for the passenger vehicle companies, I don't think that immediately the re-rating or I think the sharp rise in the valuation will take place. So from that perspective, I believe that the company may have the muted listing in the market, and maybe I think the buying opportunity will happen along with the time correction, if not the price correction. So one will have to wait and see as I look at this company. Fundamentals are not wrong. The premiumization story definitely I think appeals well as far as the company's business model is concerned. But they are not the unique ones. I think there are plenty of others who are playing in this game. And certainly, the game is being played by many other players, I think, including the likes of Maruti, which are likely to come up with the newer models in 2025. And that's where all the actions are going to be concentrating. So we remain a little bit watchful, not immediately wanting to buy into the Hyundai post listing.
Okay, there you have. But Devin, yesterday Milind Karmarkar made a very interesting point as to why he exited Titan. And he was talking about as to how Titan has a threat from lab-grown diamonds, given that 30% of their revenue comes in from diamond jewelry.
Well, I think my understanding on the subject is that lab grown diamond is a new category, and I think it's more of a consumable than a jewelry. So I think distinction has to be made between the two, wherein you are having sorry, you are having the gold and gold-based jewelry on one side, and I think consumable jewelries, fashion jewelries on the other side. uh, the Zudio jewelry format, which the trend has launched, is largely driving the lab grown part of it. And to me, I think this is an additional component of your wallet share that you're going to be spending, particularly, I think, the female buyers. So that is where probably I think you're going to have a market. I don't think that immediately it is going to encroach into any of the existing jewelry, be it in the gold side or be it in the natural diamond side. Natural diamond, of course, I think has its own challenges, but I think on the gold jewelry side, I think the market continues to remain as dominating as I think one could imagine.
Okay, stay with us. Meantime,
Stocks where numbers are due today, Paytm and Zomato. Devin, should we expect something special from Paytm?
Well, Nikunj, I think I don't know what special it could possibly bring out because I think more importantly, in the existing model, the company is struggling to establish the revenue. That is what I think my understanding on the subject is. If I think you show the sustaining path of generating the revenue, then probably I think the stock should be re-rated in the marketplace. But at this point of time, I think one is definitely waiting for those numbers to get spelled out by the company. Beyond that, I'm not completely sure as to how exactly I think they want to position themselves from a distributor kind of a model that they have been following. I think they have been posed the serious challenge coming up also from the likes of the Geo Finance, who is deeply getting into the retailing of the financial products, along with the BlackRock JV. So from that perspective, not very sure about I think the Paytm's model going forward. So different from putting any point till the time we understand a little bit more in detail about it.
Tejas Networks. By any chance, Devin, you track Tejas Networks?
So haven't got a very detailed view right now, Nikunj, at this point of time, but understand the business model very detailed. I guess I think the company has good amount of contracts from the customers, both on the side of networking as well as supplying some of the equipments along with. Uh, the challenge in the business is that I think it's a long haul business, and that's where probably I think you tend to spend more time in collecting your revenue. That is where I think the larger part of the challenge on the operational side of this activity is. So as the size grows up with the services, you probably I think end up creating the larger amount of working capital requirement in the balance sheet. And that's where one is not fully confident about as to how exactly they are going to be executing the larger order. Of course, the balance sheet size will remain stronger given the back of Tata in the company. But the fact remains that I think this is going to be largely a business where I think the working capital orientation will be higher. Technology integration itself, I think, is going to be higher, and that is where probably larger amount of skill sets would be required by the company. That is what our understanding is. Let's see how exactly they play out. So far, so good. I think the market has given them a very good reward because of the financial performance that the company has improved upon. We'll have to see how sustainable it is going to be going forward in coming period.
One stock which was really hyperactive yesterday was Tata Chemicals. Indian Hotels also had a great Monday. Why? Because we've learned at ET now that the Tata Sons application to RBI, where they wanted a waiver for listing, that has been denied. Source-based story. But the fact that there is no rebuttal which has come on this one, it appears that the source, in a sense, knows what's happening. The story is that Tata Sons could look at listing by September 2025 until unless they are able to get an extension from RBI. So why is that story important? And what has that got to do with Tata Chemicals? We're talking about Tata Sons. Well, if Tata Sons shareholding is to be considered, then Tata Chemicals, Indian Hotels, Tata Motors and Tata Steel, all of them have indirect holding in Tata Sons. Yes, ladies and gentlemen, these are companies which have holding in Tata Sons, not the other way around. That's the Tata Trust holding, largely. Tata Sons holding, largely with Trust, 60 to 63%, we all know that number. 65% actually. Now is the interesting one. Which listed companies have a direct ownership of Tata Sons? And the names are Tata Steel, Tata Motors, Tata Chemicals, Tata Power, Indian Hotels. Tata Chemicals stands out because the value of the holding, I think, would be equivalent to the market cap currently they have. Deven, would you chance your arm in any of these companies which would benefit directly or indirectly because of Tata Sons listing?
Well, I think it's a good point that you brought out, and probably we believe that the business condition of I think each of these companies particularly demands a very close look. All of them fundamentally looks, I think, very solid to me. Still, as a structural story, I think the boom run, I think, continues. I think the still as a commodity for next few years. That is what I think we believe more because of on one side infrastructure spending, on the other side I think the energy costs coming down, directly benefiting the better commodity players like Tata Steel. We like this particular business proposition. Same is the situation. We like Tata Motors business proposition. The company has done all corrective part of math, including in JLR portfolio. And the commercial vehicle segment is the one which is showing the robust signs of I think, growth going forward. Tata Power similarly looks, I think, pretty interesting company from the investment point of view, given the kind of focus that they have got on the renewables. And of course, hospitality segment with asset-light model in Indian hotels. Once again, very appealing kind of a business proposition. So I think most of the Tata Group companies today remain absolutely very convincing from the point of view of investment thesis. Maybe this market gives some opportunity at a corrected price level. They would become once again a buy in the portfolio from current levels.
Current juncture, which is a good Adani group of stock to own because all of them have corrected. Nothing exciting is happening there. Suddenly, a lot of stocks are also not showing signs of momentum. But if somebody has to invest, I'll underline the phrase here invest. And the time horizon is 3 years, which is one Adani group of stock which you think can give 40-50% return from here. Deven.
I think Adani Enterprise clearly should be looked at along with Adani Ports. Both these companies are showing the robust signs of growth. Adani Enterprise, particularly, is talking about demerging their assets, be it airport assets, the road assets, even the business of data center. I believe that I think these businesses are likely to get demerged in next 1.5 to 2 years time, and that is where the monetization value unlocking taking place, giving advantage to the investors. In Adani Port's case, I think given the kind of integration that they have done between the eastern coast and the western coast, and the kind of internal logistic also they have systematically set, I believe that I think this company is easily talking about growing at a scale which is faster than what the normal scale has been. 500 million metric tons of cargo handling capacity has already surpassed, and the company is I think going far ahead in that direction of expanding further into the larger amount of cargo handling with the value-added components in it as well. So I would think that both these companies they remain distinctly positive from the point of view of giving the value to the investors in next 2 to 3 years time.
Okay, fair enough. Meantime, Deven, we also, in the interaction with Milind Karmakar, he was talking about how IT as a sector needs to reinvent itself. What's your outlook on the kind of trajectory that we've taken, how technology is really upping its game? We've been seeing Gen AI and how IT is harnessing all of that.
Yeah, I think the clear-cut understanding is that from coding to computing is the time that we are now going to be witnessing, experiencing from Indian IT companies particularly. The coding becomes, I think, more of an easy play because of the involvement of AI. And at the same time, I think the computing is going to be more of a demanding play because of the requirement of every user industry, which is basically asking for the larger amount of AI-based applications for generating either the demand or sustaining their business model or even efficiency improvement, etc. In our understanding, I think the Indian IT companies are undergoing the change as far as the business model is concerned. Many of the companies are developing the middle layer of tools, which are basically required for underlying processing based on the cloud infrastructure that the companies are adopting. These tools are basically AI-based tools on which the use cases are getting developed, be it in the agri-tech, be it in the edu-tech, be it in the health tech. Each of the areas in which I think this particular AI tools are being used right now, they are the ones who are giving the fantastic amount of growth opportunity for the business per se. In my understanding, I will not be completely surprised if many of the Indian IT companies start offering platform as a service to most of their customers in different verticals. And that should be the area that one will have to look at. Yes, I think they are already on a larger base, so you can't be expecting a very quantum jump in the revenue immediately. But I do believe that I think from what last 2 3 years of muted performance that they have done, probably they deserve the case to come back into double digit rate of growth at around 12 to 15%. So one can remain relatively confident about the IT companies, and particularly engineering R&D space in which some of these companies, mid-tier IT companies are operating. They look reasonably good because of the verticals that they cater into.
Okay, Kunal, let's get.
I'm just looking at RBL. Again, ranked favorite, little bit of miss here and there, just got knocked out. Kotak Mahindra Bank, ranked, little bit of miss here, 4% down. Bajaj Auto, 5%, poor commentary, 10% down. The reaction to numbers where numbers are poor is very harsh. And that is never a good sign considering that markets are not reacting to good news, they're overreacting to bad news. Is Kotak Mahindra Bank a good buy even at these levels? It has underperformed. Whatever could go wrong has gone wrong. Now incremental news for Kotak Mahindra Bank could only improve because earnings are down, RBI problems are at its peak, and valuations are also at a rock bottom.
In fact, I think over the last 3-4 years, I think I have been seeing this company. It has been more careful than otherwise in expanding their book size. Maybe I think they were probably wanting to create a significantly large amount of strength at the backbone in form of the processing part using the technology, the blockchain part of the technology. In my understanding, I think the bank has possibly made all its efforts and I think consolidated itself in the last 3-4 years time, and now ready to take the call for further expanding the size of the activity. I wouldn't be surprised if probably you see organics along with inorganic growth kind of strategy this bank demonstrates in coming period, both in corporate loan book size as well as in the retail side of the loan. In that situation, all its franchise, the companies verticals which are basically there under Kotak and the bank, they are all doing well. Be it NBFC, be it AMC, be it insurance, stockbroking. I believe that each of these verticals are actually doing well and creating larger amount of value, which is not getting fully reflected into the bank. So, from a perspective of looking at the company, though it has underperformed, I believe that I think holds a significantly large amount of promises to perform and perform better than others in coming years.
All right,
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.